Let's get it. Today we're talking about one of my favorite altcoins in the crypto space. Why is it breaking out? What's going on with Chainlink? Let's go. What is up, everybody, and welcome to the Crypto Cabin. My name is Tom, and in today's video we're going to be going over Chainlink. What's going on? Why is Chainlink breaking out? What's the news going on about it? And we're going to take a look at why I think Chainlink has some potential to be one of the better performing assets during this bear market specifically. If you're new to the channel, please scroll on down, give this video a thumbs up, hit that subscribe button, and click that little notification bell and select all so you get notified for when I post these new videos. So without any further ado, let's jump right in here. So the big news of the last 24 hours basically is that Chainlink has announced that they are going to be implementing staking at some point this year. So I mean, we kind of knew that already. If you've watched any of the previous videos that I've done on Chainlink, this was something that was in the works for 2022. But they've come out with a new roadmap, which I mean includes the staking, and it also includes something called proof of reserve, which we will get into in a little bit here. So the first thing is that staking is now going to be happening. This is going to help to increase security and guarantee the user assurances of these Oracle services by backing them with staked Link tokens. So a lot of people were wondering, like, what's the actual value of the Link token, especially on some videos on TikTok. Well, if you know, you know. But obviously, there is some value in the Chainlink token in and of itself. It is going to be what kind of supports the whole network. And if you've watched a lot of my videos before, you will understand that Chainlink is one of those things that is going to help to kind of bridge the gap between real world data and on-chain data. And it is going to help to make things so much more information more easily verifiable and secure and legitimate. So this is going to introduce and incentivize to node providers to provide reliable data, and it also has a penalty mechanism for underperforming nodes if they fail to achieve, consistently accurate reports in a timely manner. So there is that incentivization to reward good data providers and decentivize or penalize bad data providers. Another aspect to this is proof of reserves, which I mentioned briefly before. So with proof of reserve, the cryptocurrency holdings of a company can now be easily audited through automated processes like we've talked about with Chainlink before. But this real-time auditing of the collateral that they have is going to ensure that their funds, investors' funds, are always protected. In doing so, this is going to help to bring a higher degree of transparency to the ecosystem as a whole and address some of the biggest complaints about how the current financial system operates. So there's now going to be way more, with the proper implementation of this, way more transparency. And quite often right now, the fractional reserve system, which is what our banks run off of, right? They only really need to hold 10% of your actual money in the bank, and they lend out that other amount. So it's really hard to kind of identify how much they actually have on reserve. And this is what is going to help allow that transparency to help users be more protected, which is a super, super crucial thing, obviously, in the financial space as a whole. And Chainlink is helping them to do that. So with all of this bullish news, that makes Chainlink one of the best performing assets of the last 24 hours here. If you're wondering when the initial implementation is going to be taking place for the staking and the upgrade, it is initially going to be starting with what they call VO.1, which is projected for the second half here of 2022. So this is kind of the news that everyone is kind of getting really pumped about, is that it's coming very, very soon. So we are almost through the first half of 2022. So it is coming up, and I'm going to talk about why I think, obviously, this is a big reason why this could be one of the better performing assets of the 2022 here, the rest of this bear market. It was one of the better performing assets of the previous bear market, so we will go over that in just a little bit here. But currently, Chainlink is obviously trusted by a lot of the most valuable DeFi apps in the space. So they're very well recognized. They're widely used. They have tons of partnerships and tons of integrations like I've talked about before. If you're wanting to get a little more information on the staking, you can obviously go and check out this link here, which I will put in the description. But this is kind of the update and the roadmap and the direct blog from Chainlink itself. But in short, they're going to be starting with an aggregate size of 25 million link tokens for the initial staking pool, and then expanding to 75 million tokens based on demand a few months after the launch. And they also mention here that stakers participating in that V0.1 release will have their tokens, link tokens, locked until the release of V1, where then they would be able to choose the commitment periods of varying lengths. Quite often, a lot of staking protocols do a 1 month, 3 month, 6 month, 1 year. That's very common. So that is kind of the amount of time that you would be able to choose from, I'm assuming, to lock up your tokens. But they will be locked if you participate in the V01 until the release of V1, which appears there's no exact set date for. So I would just be aware of that you may not be able to actively be trading your link tokens if you decide to lock them up in that time. But that's what kind of helps bring that stability to the network when you know that everything's locked and it's secure in there. So that's some of the big news. That is kind of why Chainlink is pumping, but there is a possibility that it continues to go up for a little bit. We could obviously see retracements. Nothing goes straight up forever. Nothing goes straight down forever. But this sudden spike in buying pressure has obviously helped the token breach a critical area of resistance. We were trading in this triangle for a while, but we could see some further gains. They mentioned in this article that we could get up to about $10.60, and I'll go over some of my TA a little bit here as well. But it is worth mentioning that the 920 could form some resistance. We've already broken through that, so I don't think that is going to be an issue at this point in time. But if we do come back down, that touching the top of this triangle would be a likely scenario to potentially get a decent entry in. So from my point of view, from a technical analysis standpoint, you can see this is that triangle that we did end up breaking out of right at around $8. So if we do come back down, we could test that. This mark right at around 875 is also a spot that has acted as pretty big support resistance in the past. So that's another area to watch out for. We had this 50-day moving average, which I thought could potentially act as some resistance because it has in the past as well. So I did take a little bit of profits off the table here after this. We want to sell into green candles and buy more into the red candles, or at least when there's this consolidation. So I know when I talked about my dollar cost averaging strategy, I was buying every single week, or every couple of days, even a little bit in here in the $7-8 range, $6 to $7 range even. And now we are pumped up. So I've taken a little bit of profits actually right at around this 50-day moving average. Wasn't sure if that was going to serve as some resistance, but that's just some psychology on how I'm playing this. I know obviously we could go up more, so I didn't sell everything by any means, but that's kind of the trader mentality here. And from my perspective, we could be seeing some resistance. They say around 1060, which would be, up here closer to this 200-week moving average, which is also a possibility. We've also been in this descending wedge for a very long time. So this, I'll show you when I go to the weekly chart here. We've been here for a long time, basically since back in November, the peak of the Bitcoin market anyway, when Bitcoin hit 69,000. So we've been down here in this trending, descending wedge for a long time. And we could, that could serve as resistance. Obviously, we could come back down into that, but I would be watching for a breakout from there, from a technical side of things. Obviously, would be super, super bullish from just a purely technical side. There's obviously a lot going on in the world that it won't necessarily mean that we're going straight back up to all-time highs, obviously, in the next few months. But I still do think that this means that Chainlink is set up to perform fairly well over the next little while. In addition to that, I remember mentioning on one of my recent videos, watching for green dots, right? We got a green dot at the bottom of a very deep momentum wave. So that's why I loaded up a bit more on Chainlink rated between the $6 and $7 range. When we go back here to the daily, another kind of confluence point with that $10.60 mark that they mentioned in that article is when you take the measured move from this triangle. If this breakout is to continue, you apply that to where we broke out, and that $10.60 mark is very, very close to where this breakout would potentially end up. So that is another point that I'm looking for, probably around here, or right around $10 is another psychological level as well. So just looking at it from that is probably where I would take a little bit more profit off the table as well. And if we continue higher, great. But it is quite likely, in my opinion, that we could see a little bit of something like this. So we break up, maybe we get rejected here very shortly, but maybe we come up here, come back down to test this breakout again from right around the $8 mark, and then maybe eventually we go on and break out of that big descending wedge. That is a very, very distinct possibility, and what I think could be the most likely scenario at this point in time, because like I said, nothing goes up forever, nothing comes down forever. So I wouldn't necessarily be FOMOing into these right now. We don't want to FOMO into green candles. You would wait for that retracement and look for confirmation of support either around this, between $8.70 and $8, and then potentially a breakout of the descending wedge from there. Another reason why I am very bullish on Chainlink right now is when you look at the last bear market and how it performed, it actually did extremely well during the last bear market. And so there aren't very many projects that can say that they did this, but from kind of obviously everything kind of dumped after the highs here from last cycle. So this did drop about 88-89% last cycle. Right now, from its all-time highs, we are down that exact, or the bottom, to that initial drop. We are basically at the exact same mark. We did drop that 89%. So we've dropped the same amount. We're back on the way up. And when you look at what happened last cycle, again, obviously not to say that this is going to play out the exact same, but in June, we bottomed out. So here we are again, May, June, we bottomed out, and the price rallied after that another 260%. So during this period from June to November, when you take a look at what Bitcoin was doing from June, July to November, you can see that it was pretty much straight sideways or down. Bitcoin went down about 30 to 40%, while Chainlink was going up 260%. Another way to look at this is when you take a look at the link to Bitcoin chart. We take a look at, obviously after that, the crash from January, the Bitcoin or the link Bitcoin chart went down. But once we got into the summer here, you can see that after these lows in June, July, the link to Bitcoin evaluation continued to rally on the way up to the upside, and kind of was in an uptrend all the way until the peak of this, well, not necessarily this bull run in particular, but all the way up into August of 2020. It went on a really big run. So history does show that Link can be a great performing asset against Bitcoin in the bear market, obviously against the US dollar as well. And we've dropped the exact same amount as we did the last time. Obviously, history does not always exactly repeat itself, but as they say, it quite often rhymes. Just when we look back at history, obviously, the news coming out at this point in time, dropping that 89%, basically exactly rallying up, the news showing up here, Chainlink performing really well last bear cycle. Now we're starting to potentially perform really well again. You never know exactly how these things are going to go, obviously, but it seems to be lining up to repeat at least fairly similarly up till this point in time. Things are happening very similarly to the way that we did last bear cycle. So that is it for today, team. There's a few reasons why I am bullish on Chainlink for the next few months and why I currently obviously hold a little bit. Like I said, I am kind of selling a little bit into the green candles at certain ranges. If we come back down to, like I said, that $8 mark, maybe we go up to 10, come down to 8, buy back in again. These are my ranges. We are now outside of the range that I had set for my buy zone, so that is why I am kind of selling a little bit into this with resistances coming up. If we come back down into these yellow ranges, I'll buy some more. As always, thank you so much for watching, and if you got some value out of this video, please scroll on down, give this video a thumbs up, hit that subscription button, and click that notification bell so you don't miss any of my new videos. I appreciate each and every single one of you. I'll see you next time for the next episode from the Crypto Cabin. Let's get it.